Tesla stock closed at a record on January 3rd, 2020, and that was following their production and other announcements from Q4, which sent the stock to record highs. I'm going to show you what is in my investment portfolio and the type of trading that I'm doing around the position. Elon Musk sent this tweet out on the 31st, 2019, the 31st of December, and I actually added a little bit to my position after he sent out that tweet on January 2nd. And I don't typically like to read into messaging like this, but given that the stock has been on such a roll and expectations seemed muted going into the report, I thought it wouldn't be a bad idea to scale up a little bit. I'm going to show you what I did. By the way, I left this comment on a different YouTube channel, and if you've seen my last video on Tesla, you'll understand a little bit about how I'm thinking about the robotaxi opportunity, and somebody liked that reply, so thank you for that. Here's what I did on the 2nd. I added $10,000 worth of Tesla stock, and you can see my trading has been sort of one of scaling in, which is what I like to do when I don't have a particular event or catalyst that I'm looking for. I like to just try to average into a position, and that way, if you don't bottom tick a stock that you're going long, you don't have to worry about it. You can sort of scale your position over time. This is how much I have right now. I know this is a still image. I'm still working on my videos, so give me some comments below about changes I can make or things that I can do to make these videos more entertaining and better. I want this to be a channel where people can come and learn and discuss ideas and all of those things. And honestly, talking about all of this stuff is helpful for me. So anyway, thank you for the feedback in advance. And for now, here's what I have. So the market value of my Tesla shares in my Interactive Brokers account is $20,000. And the market value of the Tesla shares in my Fidelity account is just under $50,000. So all in, just under $70,000. That's the size of my Tesla position. And on the Fidelity account on Friday, I was up $1,400. So that's how much I made on the 3% gain following Tesla's announcement. And one thing that's interesting, actually, let me skip over here. One thing that was interesting about the announcement is if you look at Tesla stock in comparison to Ford, Daimler, Fiat, Volkswagen, BMW, GM, and Toyota, all of those stocks were down on January 3rd. So obviously the reaction for Tesla was quite favorable. And by the way, the market was down as well. But the reaction was quite favorable. And the stock is certainly bucking the trend. So I don't think this was short covering. I think people were genuinely surprised by the results, and the reaction is a good sign. So let's go back. Here was the actual report. In Q4, deliveries went to 112,000, and that beat the analyst average forecast of 106. The YouTube videos and the news articles that I read ahead of the actual announcement led me to believe that all of the estimates were in a reasonably tight range. And I don't know, the bias to me felt a little bit negative and a little bit to the downside. So usually that's a good setup when people are negative going into a release or the estimates are in a very small range. If you have a nice beat like Tesla did, you can get a good reaction. One thing that I noticed about the release, and they say this right at the end, so we already covered the 112,000 deliveries, but at the very end of the paragraph they say, deliveries represent only one measure of the company's financial performance and should not be relied on as an indicator of quarterly financial results, which depend on a variety of factors, including the cost of sales, forex, and a mix of directly leased vehicles. So this stood out to me a little bit because I hadn't remembered seeing this. I actually went back to 2019 and they said the same thing. So I don't think there's anything to read into there in terms of a warning. And last year they reported Q4 at the end of January. So we'll see if there's any trading or any moves to make ahead of the quarter. But for now, I'm staying put. One thing that I want to do is start to look a little bit more at the opportunity from the Tesla auto company And if you watch my last video, I covered the robotaxi opportunity. I think this is an important slide and an important chart and good data to keep in mind, which shows the dispersion of price to earnings estimates for some of the different autos. I don't know why I'm not able to get some of the European guys, but basically, you know, the PE estimates hover in the mid single digits. And then you have Daimler up there at around 9. Obviously, when you compare it to names like Alphabet and Apple, you can see that their multiples are a lot higher. So the point is that when you think about Tesla as an auto company, you do need to be careful about the valuation, especially what the valuation could be once they reach maturity and they sort of start producing and selling a normalized number of vehicles. And I'm not a huge technician, but it's worth noting that the stock has broken out of this range. There previously used to be a top around 380. And I think the breakout from this range is significant. If people reorient themselves to, say, the $400 mark or so, that means good things are ahead for the stock. So I made a little operating model here. And just to remind you, this is totally for informational purposes only. You should rely on your own tax preparers and investment professionals to guide you when it comes to making investment decisions. That's disclaimer number one. Disclaimer number two is that this is an extremely high-level model with lots of what could end up being completely erroneous assumptions. But I just want to show you how I think about things. And if you're an expert in Excel and if you're an expert at modeling, this probably won't be very interesting to you. But I like to always just distill my ideas and my thoughts down into a high-level spreadsheet so that I can make sure that my thoughts are reasonable. Also, feel free to leave me comments on this aspect of my projections and let me know if you agree or if you disagree or whatever. So right now the weekly production numbers are around 10,000. That gets you annually to about 500,000 vehicles. I think their ASPs are higher right now. I want to assume a 45,000 ASP long term because I think prices will be coming down. I know the gross margin number is low relative to Elon's targets, but I want to keep this here. SG&A as a percent of sales at 10. I actually went and looked at Ford, which is obviously a mature auto company. Their total SG&A is about 8, and that also includes about 2% worth of advertising spend. So I think long term for Tesla, a 10% SG&A figure is actually extremely conservative, especially when you consider the fact that they don't do any advertising. R&D as well. I mean, you can make an argument that a mature company has 0 or that this gets lumped into SG&A, but the bottom line is I think an additional 15% worth of expenses on top of an auto gross margin that falls 500 basis points short of Elon Musk's target of 30 is pretty conservative. So what I did here is I took 185 million quarterly of interest expense, which represents their current capital structure. Then I just annualized that number to get their implied annual interest expense. And you can take a look at the formula here if you care to. But basically what I did is I assumed that they raise new debt each time they add to their annual auto production. And basically what I did is I said, take the difference between the new auto gross margin and the status quo, which is 5.8 billion, and multiply it by 3, i.e. assume that the payback from the auto gross margin is about 3 years, but that you need to raise 3 times as much debt and that you pay 5% on that debt. And so the point is that as the model flexes up in terms of the production, the debt does as well. Taxes, this is totally a swag. I don't know. Global auto company tax rates are frankly all over the place, and Tesla may not be a taxpayer for a very, very long time. I think this number is conservative. 214 shares compares to 184 million shares currently. I explained in my other video why this is my assumption for now, and I'm sort of picking slightly below market multiple. Obviously, this gives me a low price of 185 compared to where the stock is today. However, this is not what the stock is pricing in currently. I made a little data table here to keep track of what would happen to the stock price assuming different scenarios. So along the top here is weekly production. Make that. And then on the side is the multiple to the stock. So let me just show you how I do that real quick. Basically, the way a data table works is you take your output, which in my case is the $105 stock price, and then it flexes that output based on two different variables. In my case, I made the variables, like I said, weekly production and multiple, which is right here, stock price multiple. I like to hide that by making it white to make the data table a little bit cleaner. I can merge and center this and do that. So let's just check it. Let's see, basically at 18 times, if I change my model to weekly production of 40,000, I should get a $428 stock price. Oh, I don't. Yes, I do. Sorry. 18, 386. If I change that to 20 times, then I'll get a $428 stock price. And the shortcut for this in Windows is Alt-DT, Alt Data Table. If you're using maybe a different system, but you have Excel, you go to Data, What If Analysis, and Data Table. That's how you do it. So from my previous video, I'm adding in different potential values from the robotaxi opportunity, which I think could be up to $800. And let's rename this to Auto plus Robo. These would be the values of the stock, essentially combining these two businesses. And down here, I made a little table showing the resulting upside to the current stock price of $443. I always like to think about things in terms of a risk-reward skew. So if the stock went up to $2,000 versus $443, that's a nice return. I think if you price these two things in, the downside is maybe the high 200s. Of course, the stock could trade anywhere, but the risk reward of 10.5 to 1. And I know there are people that will argue with me on this on both sides. But when I add up the auto and the robotaxi opportunity, this is sort of what I get. Let me know if you have questions about this. Let me know if you don't understand the model, or if you think it's too simplistic, or not simplistic enough, or whatever. Let me know. I'd love the feedback. So there are just a couple of other things that I wanted to cover. One has to do with these annual production assumptions, 5.2 million vehicles. I know that's a lot. Maybe Tesla will never get there. But look, given that they're running at roughly 500,000 right now, Musk said he thinks that they could 10x this number over the next 5 years. I don't think that's crazy. GM is producing roughly 8.3 million vehicles. And here's one interesting thing I wanted to show that I never see anybody talking about. Because Ford and GM have legacy assets, including factories that were very labor intensive and all of that, they have these pension plans that they need to fund. And if you look at their US plan at the end of 2018, their funded status was negative $2.5 billion. Their non-US plan funded status was negative $3.8 billion. Excuse me. And so Tesla has no pension plan, or at least, excuse me, they don't have an unfunded pension plan. So when you consider the risks of a legacy automaker, you have to remember that they have all these legacy internal combustion engine related contingent liabilities that still need to be funded. So just keep that in mind. I will make a different video and let you know what I'm thinking in terms of trading and positioning going into next quarter, or going into the quarterly report, I should say. Last year, they told us on January 18th that they would be releasing their results on January 30th, and then they did. So we'll see what happens this year. But in the meantime, have a great time. Thank you so much for watching and liking the videos and subscribing and all of those things. I really appreciate it. It means a lot, and I'll see you soon.